Welcome back to Halftime Report, and we'll talk about commodities now. Joining us on the show now is Chintan Mehta of Abans Group. Chintan, hi, good to have you. And so much movement into the markets right now. But I want to start with the precious metals as prices. We're holding around that $2,000 per ounce mark, but every time we try to cross that level, there's a profit taking there. How are you looking at the macro markets right now and its impact?
Manisha, first and foremost, thank you for calling me here. And yes, you are right. We are seeing a lot of profit taking between 2000 and 2010. And I guess we will need something which is very fresh from the US markets, that they are holding the rates, or they might come up with some dovish statement, whereas they say that they can reduce interest rate in 2024. These are the triggers only we can see from them, and then only we can see a further rally in the gold, because they are whole interest cycle is picked out, data is coming under control, inflation is coming under control, job rate is getting slower and slower in US. Everything is priced in within this rate of 2000. So if we need further, if the bull have to come back, and if you see the OI part of it also in CME, then decent amount of OI is already been built up. So what that suggests is that we will need fresh buying. Then some statement from the Fed should come, which is dovish, and that only can take the gold ahead of 2010. So as per me, this is a profit-taking zone only, and one should be very light going long.
And would you say the same about silver? Because even as we understand that this is going to be yet another year of deficit in the global markets, and the industrial demand is, only growing from here. Here as well, we've seen $24 per ounce as a resistance.
Yes, definitely. 2380 and 24 is a definite resistance zone. And you are right. In China, what we see is the solar capacity has already been one side there is a world and one side there is a China. And they are keep on building the solar where silver is being utilized. And it is an industrial metal, and Chinese economy is also doing better than before because government is supporting. But it will follow gold, but intensity would be very high. So I guess, yes, it is one should go very, very light at this current moment in gold and silver. And I think book profit if they are having a long position at the lower level, and wait for the right level, which is or right signals rather in coming time before they once again build the long position.
Fair point that. Chintan, how would you look at the industrial metals as a sector? Because here as well, we've seen a very divergent fundamentals for all. Nickel is the worst performer within the sector. We've seen copper grow quite strongly from 7,800 off a low to 8,400 right now. Zinc, aluminum also seem to be seeing some support right now. But with the kind of year that we've left behind, how are you taking your positions for the last month of this year?
We had Abens after the debacle of nickel. We are not tracking it much, but yeah, copper is taking a very good support at the lower level. And yes, in Indian terms, if you see 700 is holding a very, very decent support. And I think we buy on dips is the strategy right now in copper and aluminium. Because what if you see that Chinese government is trying to support and give the stimulus to real estate sector and try to revive their economy. If Chinese economy starts doing well, which takes little time for liquidity to soak in the industry and the real demand to come in, which might happen by early 2024, then copper is already at the lower level from its highs, and it is a perfectly suited for another one bull rally. So I would say 7,800 and 8,000 international terms in the 700 level in MCX term is a very good buy, and one should be buying on a deep level. And aluminium is also a very good range around 2,200 level on the LME and around 200 level. And it is constantly shifting their lower base to upper base. Only thing is that inventory is little higher in aluminum and zinc. So real demand should come in, and then only we can see rally. And on a zinc side, I'm not really very bullish because I'm seeing a constant supply in the stockpiling of the material in the LME and the SHFE warehouse. So it is a good buy, but only at the lower level. It is also shifting its base from the lower level to higher level. So like if you see on a MCX, it has started journey from 210, then it went to 215 and 18, and then it came to 220, and now it is at 225. But I see a lot of resistance here in zinc because inventory is huge and there is lack of demand, and year end is around the corner. So I think activity will reduce over a period of time. So for a fresh need to see the data where actual demand goes up and stockpile reduces in SHFE and LME warehouses. So aluminum and copper are the commodities now wanted to go long.
Okay. All right. I also have a question on the energy pack as well, because this is going to be yet another week which we seem to be closing in the negative for the crude oil prices. So while $80 or thereabout is how it's holding, we've been noticing on how the crude prices have been looking at one-way decline from that 96 of a high that we saw in the month of September. Now, ahead of the OPEC meeting on 30th of November, how would you look at the world before 30th and after that?
Yeah, see, energy prices, especially crude, is largely right now depend upon the political scenario which is happening on geopolitical tension which is happening over there, because it all depends upon the statement from the government whether they want to reduce their production, or OPEC will able to take the consensus of the people where they reduce their supply, and the likelihood of that getting done in time was very less, and that might be one of the main reason to get it postponed. So we have to see the statement from them. Whereas if you see from the supply side, US production is at all-time high right now, whereas all festival seasons are around, but the usage has not gone up with the Thanksgiving is already happening. So what we are seeing is the supply is on a very large scale, it is available, whereas the demand is not going up. And on the other side, if the production cut doesn't come in, which I don't think so, Iran or Russia would follow the production cut, I think then there will always be a pressure on crude from here. And what we see, 70 and 72 is the level to watch out. And I think that's where it can see its value coming in again to buy. But once again, it all depends upon the political statement which comes on the OPEC meeting.
Sure.
All right. Thanks a lot for that and for giving us your view.